In this video, we are going to go over Coinbase's stock as of April 14th, 2021. This information comes directly from their prospectus. This is also right after their first trading day. Make sure you watch this video until the end to get the proprietary intrinsic value range that we calculate. If you do enjoy the video, please don't forget to like, subscribe, and even hit the bell to get notifications sent to you whenever we upload a new video so you get this information in a timely manner. As for business, Coinbase just has one segment, so it's nice and easy to value relatively. Transaction fees make up 96% of their revenue, which makes it even easier to value. You really have to only focus on their transaction fees. They have 43 million verified users. This is a good metric because if anyone has ever signed up for a Coinbase account, you have to supply some type of ID to prove that it is you. They also have 2.8 million monthly users that are doing some type of transaction on Coinbase. I found a good summary of their business in the letter from the CEO in their prospectus. To summarize this box here at the bottom, Coinbase is building a digital infrastructure for crypto. They allow you to buy, sell, store, save, spend, and use crypto all through their platform. It's almost a one-stop shop for crypto, if you will. They want you to think of them as a financial account. Think of this as replacing your bank account, your PayPal, your Venmo, any payment app. Real quick, for auditors' opinion, this is an important thing to look at whenever you're analyzing any company, especially a new one. Coinbase had an unqualified opinion for financial statements and an unqualified opinion for internal controls. If you're wondering what unqualified means, just know that it's the best opinion you can get and basically says the auditor didn't find anything suspicious. As for financial health, the quick and current ratio are each above 1. They are the same due to Coinbase having no inventory. Intangible assets make up a very small amount of the company's total assets, which is a good sign and really not what I was expecting for a technology firm. Most importantly, what should stand out to you from this slide is total debt to equity being 0. They have no debt besides some convertible notes. Also, not extremely low, but accounts receivables to sales is at 14.83%. which probably comes from some of their institutional customers that probably buy with credit. However, this does show that they are relatively good at collecting their revenue and turning it into cash. Also, to continue on their financial health, free cash flow per share for the past 2 years, normally it'd be a 3-year average, but this year in their prospectus, they only gave us 2 years of data. So last year was negative, this year was positive, so it came out to be an average of $5.67 of free cash flow per share. Also, obviously, we couldn't calculate ratios for op cash flow and EBIT to interest expense because they have no interest expense. For competitive advantage, we can only give Coinbase a 3 for several reasons. First mover can be at a disadvantage, even though most people assume the first person in the market has an advantage, but it's not necessarily the case because they can put in all the hard work, all the research and development cost, and then have it stolen by a second comer into the market. They claim to have never had users lose funds in a security breach. This did bump up their competitive advantage from a 1 to a 3. Also, what bumped it up from a 1 to a 3 is a market-leading share of assets. So they hold $90 billion worth of customers' assets that they have purchased through the platform. They also claim to have a deep liquidity pool for exchanging a wide range of cryptos. And as we discussed before, they obviously have no debt, and this can help whenever a recession happens and can make the firm less risky in a financial aspect. However, you have competitors such as Binance, Kraken, etc. There's a bunch of others popping up every day, which could possibly lead to a price war, driving down revenue lower and lower for each company. Because if you think about it, the products that this company is offering at this time is really just a commodity, and it can be difficult to separate their product from another competitor. For the 3 growth rates, since some of the metrics had negative numbers in the beginning/ending years, we couldn't calculate a CAGR for all of them, and it wouldn't have been accurate anyways. However, we did manage to have all positives for the 3 metrics you see here: gross revenue, revenue, and EBITDA. Notice gross revenue is even faster growing than revenue due to the lowering cost of goods sold. Also, notice both of the revenues are well above 100%. Also note that these are just the growth rates from 2019 and 2020, so 2 years. due to that was the only information we were given in the prospectus. As for some quick valuation metrics, price to free cash flow for the most recent year was 24.49, which is extremely high, but actually lower than I expected. But when I factored in my optimistic growth rate of 30% into the price to free cash flow all over free cash flow growth, which is also known as a price per earnings growth ratio, PEG ratio, when I plugged in the 30% growth for that, we got it below a 1, which is a sign that it's still, even though the price per free cash flow is super high, it's still, the growth is expected to warrant that. Also notice the extreme free cash flow to total assets and free cash flow to invested capital ratios. For calculating the intrinsic value, I chose free cash flow amounts as the base to apply the optimistic and pessimistic CAGR to, because it is such a good metric when it comes to actual cash generating ability of the firm. I chose 30% as optimistic growth rate because revenue is growing at 139% and gross revenue is growing even quicker at 153%. Obviously, this isn't going to be sustainable for the next 10 years, hence the 30% would be a good average for the next 10 years, I estimated. I consider 10% a conservative, pessimistic rate due to the fact that even if competitors came into the market to drive the supply up of products, I still predict Coinbase growing free cash flow at 10% annually for the next 10 years. So this created a range of $781 to $197 and an average of $393. So this average is calculated by basically using 20% as the growth rate, which is the average between 30 and 10%. The closer you can get to $196, the less risk and higher gains you're expected to receive, and vice versa for $780.82. As of now, the shares are trading below the average of $393. Thank you for watching till the end. If you enjoyed the video, please like, subscribe, and even share with your friends interested in investing. If you agree or disagree with my estimations, please let me know in the comments. Also, if you have any more recommendations for stocks you would like me to value, please include that in the comments. Thank you for watching and go have fun investing.